from one earnings to the other, and this one is coming in from the real estate space. Irfan Razak, the CMD of Prestige Group, caught up with me a little earlier, and that particular stock is in the positive after the results came out. And I started by asking Irfan about the key highlights which drove the growth, which was also volume driven for the company in the last quarter. So the highlights of the factors impacting the performance of Prestige in the last quarter.
I think overall the performance in all the segments of business we are in has done extremely well. Of course, the residential side, we did 4,000 plus crores of top line sales for the quarter. And that's boosted us for the entire 9-month period for more than 22,000 crores for 9 months. And our team is very, very bullish, and they are very confident that they'll now cross 30,000 crores. I had stopped myself from saying this earlier, but now since we've crossed the 9 months and we are very sure that we can reach this, I can confidently speak it out. And I think team will perform and will deliver what they are committed. And on the hospitality side, we've had the best quarter, again, because of our festivals, celebrations. Hospitality top-line revenue has been good. The office leasing has been the best ever. I think in all India, office leasing has touched a record high of 96 million square feet, and Prestige shares around 8% or 9% of it. Similarly, the retail segment also has done extremely well. We've got the maximum sales that happened during the quarter, especially since they were festive months. So I think the economy is doing well. People are spending money, and according to me, there's a lot of cheer.
That's right. In fact, Irfan, there is one point that your growth, as I said, looks like a volume-driven growth, because the margins have come under pressure compared to the earlier margins that you had clocked in. So how is the margin picture looking for the present quarter and the overall margin outlook that you are seeing in this?
I believe that there's no pressure on margins at all. However, we have kept our pricing as realistic and as affordable as possible. What figures in the numbers, what reflects in the numbers is all about accounting standards, how accounting is done. Because real estate, first thing is we have to account as per on the completion method. And that has that lumpiness. Certain quarters you have more projects or better projects that come in, and certain quarters there is either revenue is down only because of the completions have not happened in that particular quarter. But if you look at it, I believe that as a company we have more than 60,000 crores of revenue, which is still not yet recognized in the books. Though we have, it's a little bit of lopsidedness where we have to have the expenses front-ended, but the revenue is back-ended. But I think overall our margins are intact and we have nothing to worry. And one more blip that happened this quarter, which shows the margin to be a little less, or PAT margin to be a little less, is as per accounting standards, we hold a big portfolio in the Nexus REIT, almost 4.5%. And that in the previous quarter, we have to have a notional gain, but that notional gain has to be booked or there's no sale. So that had to be booked last quarter, and we had a profit of 170 crores, which was booked. And this quarter, since the markets were choppy, there's actually notional loss of about 70 crores. So net, it's a big impact of 240 crores. So the plus income, and in spite of, we got the minus. So I think that's where the impact is. But as far as business is concerned, I think there's no major impact on the bottom line.
All right. So yes, your profits have been robust, but your profitability took a dip versus the previous figure. But Irfan, also looking at this particular quarter, What is the guidance you're giving in terms of even the profitability, margin picture, and the demand and pricing that you're seeing in all the three segments?
No, I think it'll remain stable. If you look at the 9 month period for residential, we've got EBITDA margins of 30 plus percent, and that will remain the way it is. Even part margins also pretty healthy. And I think if you take all segments together at the EBITDA margin level, because each particular asset class has its own profit margin, and I think those are going to remain only in the accounting standards, the way profits are booked. So that will have an impact on the P&L and the balance sheet, which really is not any major thing. So the guidance that I give is the same. If you look at the average of 9 months, I think that average will remain. And also, as I said, we are this quarter, we are looking at targeting another 8 to 9,000 crores of top line sales, which we are going to cross the 30,000 mark.